Kumatali Boo, how are you? Yeah, good morning. It's 6 Nespressos in the morning. Hey, what time is it? It's 6 Nespressos. All right, hey, very interesting time. It's the last day of the quarter. It's an important day. That being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term and never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader just like you, and I love it. This is a cool business. It's a great small business to be involved in. So let me know how it can help. Ask questions. Hey, Wayne, what about this? What about that? I want to talk about some fundamentals today because that's what I do. We'll do some technicals. That'll be great. But let me know how it can help, and I'll do my best to address your needs. If you look at the description below the video, there's a link to fxbootcamp.com. Don't join, though. It's too expensive. $88 a year. Some guy joined 3 years ago or something. He sent me an email, and he's like, how come I have to pay again? Well, it's only $88. Pay again. If you want to join again, pay the $88. It shouldn't be a door that can't be opened. Anyways, there's also a link in in the description below to my book. Maybe you like to read instead of watch videos. See, FX Bootcamp, when you join, there's 65 hours of videos. And you got to watch them. Okay? Because in my live groups, when you ask me, Wayne, what's a pivot point? I'm not going to answer that. Wayne, what's a 5A cross? I'm not going to answer that. There's training courses. You need to know all this stuff. In my live groups, we set up trades. We talk about planning. So, for example, we spent three and a half hours yesterday in the swing trading group talking about the future, not the past. Pretty awesome stuff, by the way. You'd be shocked at how amazing our crew is and how global our reach is. All of a sudden, it seems like we have boots on the ground everywhere from New York City to Johannesburg to Frankfurt to everywhere. Just pretty amazing. We just have eyes in the skies, boots on the ground. Pretty amazing stuff. So maybe you want to become a member. Maybe you'd rather read a book. That's fine. You're also going to need a trustworthy, ethical foreign exchange broker. We all do. It sounds like a straightforward thing. Wayne, aren't all brokers trustworthy? I would hope so. But history hasn't proven that. So it's rare, actually. Traders Way earned my loyalty and respect with their actions in the real world. They didn't earn my loyalty and respect because of a banner ad. In fact, I don't even know how much banner ads they buy to convince people that they're the cheapest. That's not really what Traders Way is about. Yeah, they're competitive for sure. Fast execution speed for sure. But ultimately, you want to judge a broker by their actions. And Traders Way earn my loyalty and respect with their actions. Maybe that'll set you off on your due diligence. And you say, well, maybe I'll check them out. Check them out. Open up a demo account, tradersway.com. Okay, I want to talk today, or at least begin our talk today, about fundamentals. Have you heard about Nike? Last time I looked, Nike was down 9%. Probably will get worse today. It's a Dow component, so that's going to hurt Dow. But let's go back into history to understand what's going on today. There was a time not long ago when all of the Nike factories in Vietnam, for example, were closed because of COVID. They make shoes. Actually, they only make shoes to sell shoes. So they really sell shoes. You can't sell what you don't own, right? So there was a time in recent history where all the factories were closed and people were not making shoes. But Americans and others had free money from the government. And they're like, you know what? I've always wanted to own a $275 pair of shoes. And since Joe Biden gave me money I don't need, maybe I will try these shoes. You couldn't get shoes. So when the factory started to slowly open again, Nike was already behind the gun, so to speak. They were short on shoes. Okay, fine. And shoe manufacturing was slow, so they ordered as many shoes as they could possibly get. They ordered a lot of shoes. They ordered enough shoes to fill current demand, which was very high, especially at high prices. But then they were worried that the factories couldn't make the shoes big enough, or fast enough, I should say. The other problem Nike faced is even if the factory could make the shoes, then you put them on a truck, moved them from the factory to a port, and we had a shipping problem. The supply chain was a problem. There were not enough ships. The ships were expensive, but you could just pass that along or eat the cost. Nonetheless, Nike was desperate to get their shoes to America, to get that Joe Biden money. But there were not enough ships, so that was a problem. And the supply chain was slow and expensive. Something happened. The factories came online pretty quickly, and they made a lot of shoes. And Nike had double ordered, for example. Let's say just ordered as many shoes as they thought could get made. Problem is, the shoes got made. They also thought they would take a long time to get the shoes to America because of the constraints of the supply chain. But suddenly the ships shipped. And now we have a problem. A company like Nike, which has shoes in every store in the world, at least 30% of the store, when you go to a shoe store, you go to a Foot Locker, it's mostly Nikes, and then a bunch of other choices. Well, suddenly, there's more Nike shoes than the world needs. They made too many too quickly, and the ships showed up too fast. And now Nike has shoes that Foot Locker hasn't purchased because they don't need any shoes, because Foot Locker also ordered a bunch of shoes. And now Nike's inventories are ridiculously high, and Foot Locker's inventory is ridiculously high. And Nike has a real problem. So is Nike stupid? Probably not. They've been around for a while. I remember the first time shoes were priced at $100. Do you guys remember Bo Jackson? His cross trainers were the first shoes I ever heard of that were $100. So I worked 2 jobs, saved my money, and I bought a pair. They were cool. I was in high school. So they've been around a long time, right? Everybody knows Bo. You don't know Bo Diddley. Anywho, and then what we got after that was Michael Jordan. High-flying, death-defying, 360 slam dunk. It's the shoes, Spike Lee told us. It's the shoes. Okay, anyway, so Nike's a beast, and I don't think they're stupid. But they played the game the best they could in the times with the information that they had available to them. I wonder, and this is what we all should be pondering, how many other companies have done the same? They were freaking out that there'd be no shoes. They'd be freaking out that there'd be no semiconductors. They were freaking out there'd be no graphics card, aka GPU, to put on shelves. Now nobody needs GPUs. You don't get paid to mine anymore. Good thing I didn't put millions of dollars into a mining farm. So now what? Are there too many semiconductors being made? Are there too many GPUs being made? Are there too many shoes being made? Are there too many shirts being made? Are there too many aluminum ladders being made? Interesting. So now if we start having companies reporting not just disappointing results, but horrifically bad reports. This release that we had today from Nike is historically bad. They just got a direct hit by the Category 4 hurricane. Boom! Financial disaster. But how many are going to start reporting that in the fourth quarter, something similar? Remember, we got earnings season coming up. What if it's really bad for a lot of companies? Then it's the second wave of the decline in the stock market. Remember, we talked about this early in the year. The first wave is simply repricing because valuation models are based on either opportunity cost or interest rates or inflation, depending on what kind of business you are. But nonetheless, the little I goes up. Or the RF, the risk-free rate of return, goes up. And when that goes up, the valuation model simply puts the value lower. It's just math. But the next wave is when those companies, because of the risk-free rate of return being up, or inflation being up, or interest rates being up, then they can't make profits. And that's the next leg down for the stock market. If we go into October and companies start reporting that they, just like Nike, are in a world of hurt. If Nike can't sell shoes and Apple can't sell iPhones, what are these companies now worth? Probably less. Uh-oh. Could be interesting, huh? So hopefully that's a helpful overview of what might be happening. How the world, what the world might be like. Could be interesting. Could get worse. We don't know. So today might be a rally day because it's the end of the quarter. But be careful. Okay, I'd love for the stock market to go up. But if that is true, if Apple can't sell iPhones and Nike can't sell shoes, then they're in trouble. And those are the good companies. If NVIDIA can't sell a GPU, what's your other choice? Some less desirable GPU. And they might be doing worse than NVIDIA, for example. Uh-oh. So be careful out there, everybody. Be careful. Be careful. We're looking at oil here. Oil around 6 o'clock in the morning started a downward trajectory off of 83. Opened. Tested the first level of resistance, which is here. headed straight down to the first level of support, went back into the role reversal, and has dropped down to the psychological level of 80. Now we're in a scenario where, and I drew this half an hour ago, right after our oil trading group. I drew the down and the up. And what happened since then is we went from the bottom up to the line where I said down. Of course, it's just a continuation idea. And it dropped. Okay, maybe riding that moving average. It's just a 5 EMA. Don't get crazy. But nonetheless, double bottom now maybe around this 80 and upward move. So any bulls that want to buy, that's the price, probably. Now, I don't know if it's the bottom. You might buy it there and it makes a lower low and then you lose some money. Well, welcome to investing and trading. Okay? One of these is likely correct. Where do you get a EA that owns multiple that will open multiple trades and multiple prices? I have one somewhere that will open a long and short at the same time, but not multiple. So maybe and you might want one all in the same direction or not in the same direction. I don't know. I don't think I have something like that, but why wouldn't you just do it yourself? NP says also all the companies that hired many people. It's true. Companies like Amazon hired as many people as possible for their warehouses because they were desperately short of people. Demand was super high for Amazon.com stuff because you couldn't leave your house during COVID. So you bought stuff. Also, you got that free Biden money. 10% of Americans lost their jobs. But virtually everybody got free money. Doesn't make any sense. It's stupid. So a lot of people are like, well, I guess I'll build a home office with my Biden money. After a year, within a year of the COVID stimulus checks starting to come in, 1 year later, we found out of that money being spent, the vast majority of it was on food and beverage. Not a huge return on investment for buying food and beverage, huh? So anyways, Amazon hired a lot of people and then suddenly they realized they have too many people because that huge demand went away. The other thing is companies hired a lot of people, and the other economic studies have shown that the new people that got hired are really not good workers. They have that lean back, laid back, quiet resignation or whatever they call it. There's different names around the world. But the bottom line is wages went up because employers were desperate and they were just hiring people because there was a shortage. People were not coming back to work. So if you were willing to come back to work, they're just like, we'll hire you. Well, I'm not a very good worker. It doesn't matter. We need bodies. Well, of course, that's always a mistake. So they hired a bunch of mediocre workers, and we're finding out that their productivity is very low. And if you're a company, you might as well just get rid of the low productive workers because they're not productive. So you might as well have no productivity and not pay for it. The problem is you want to pay for productivity. So if you earn $33,000 a year in your job, you must earn $100,000 in value. That's how it works. Because the company has to pay taxes, the company has to pay rent, the company has to do marketing and advertising. An accountant at a company is not a profit center, so you got to pay for them. So eventually, every single worker has to produce twice as much productivity than they cost. So now if you hire a $30,000 employee, but you have to pay them $50,000, but they only produce $20,000 worth of value, dude, you're just better off having low productivity and not pay money. You might as well pay no money for poor productivity. You're better off. You'll have more money. So anyways, so that's another point as NP brings up. Those companies will start laying people off. Apple will probably lay people off. Facebook is laying people off. Nike will probably have to lay people off. Nvidia will probably have to lay people off. Why would Nvidia have to lay people off? People don't need GPUs like they used to. Oh, well, sales are going to go down, profits are going to go down, prices are going to go down. You got to lay off at least the least productive employees. And then probably a few others. Maybe the ones that hired the poor employees, right? So anyways. Can I have the one that opens and buys? No. And I don't even recall what it is. No. Sorry, man. If you join FX Bootcamp, there's what? 200 templates and indicators? 200 files for your MT4 or MT5? That'll do. It's a dangerous game, but if you don't even know how to find the EAs, then you shouldn't. Okay? That's a big red flag there. So be careful. But like, how do I put in multiple long orders? Okay, one at a time. All right, so we'll get off oil. You guys want to do gold, oil, and Bitcoin? Well, we did oil. Okay, I think both bulls and bears have already made their trades right now, and they're both waiting when it comes to Bitcoin. Sorry, crypto miner. But hey, the upside, crypto miners, you can get an NVIDIA card for cheap. Huh? You've been holding out for that 3090 Ti? Okay, so look, bears did a front run off the central. Bulls are, oops, let's do it in blue. Bulls have this going on. And we don't know which one's going to work. Would you spend the extra money on the TI? Is that worth it? Yeah, that's what I hear. Good morning, OGB. So that's that. It doesn't give us direction. Not down is interesting. But if you're doing the daily 21, it says down. And I've already covered this, but down means 15,000. And of course, if it's 15, why not 10? If we're about to have a brutally bad October, Bitcoin's going down in a blaze of glory. What would make the U.S. stock market, the S&P 500, what would make it tank hard? I mean, like way down. Is there anything that could do it? What should we observe to confirm such a move? Remember, I'm not about hysteria. But we're at a bottom, right? So we got to buy at the bottom or sell at the top. We got to figure out what to do. Super strong dollar. Yeah, partially. I don't think that's the full story, but Nike has to, right? Nike is having trouble selling shoes internationally because people in Germany can't afford it. They're spending all their money on energy. But also then they have to convert the euro into dollar, and that's expensive. So now German Nikes went from 150 euros to 250 euros. And they're like, Because a lot of the Nike shoes, they're not even that good. It's amazing what poor quality Nikes you get for 80. I'm like, they're $20 shoes. And they're asking 80. And then you ask the salesperson, well, why are they so expensive? Oh, they're super light. Yeah, they're made out of cardboard. What the hell? These shoes suck for 80. Okay, but anyways. Global events such as a war, yeah. It's too hard to bet on something like that. Euro winter might push it down. You guys are you're thinking abstractly. I don't want an abstract. Well, what if an asteroid hits the Earth? Yeah, that would hurt the stock market, but none of that's relevant. They don't get gas. We already know about Nord Stream. China stays closed, but we already got that. That wouldn't make it fall further. October. What happens in October in the stock market? Why do stocks get valued? How do you value a stock? How do you value an apartment building? How do you value a bond? What is a bond worth? It depends on the income or cash flow it pays. So when earnings season comes out, starts in October. If the news is bad as it has been for companies like Nike and Apple, if other companies are in the same situation, blood will spill. And Bitcoin is going down to 10,000. No, Frank, that wouldn't be correct. September, maybe, but not October. No, October is a buy month. Now, in January, I said this year, it won't be the case. Now, I might be wrong still. We're at a turning point. We're at a price where if you wanted to buy the S&P 500 and you thought the worst is over, today would be a buying day. But if I'm right by what I said in January, I said usually this is a time you would be long the stock market, but not this year. Last year, yes. Next year, probably. This year, no. So, hey, it'd be interesting if I was right, huh? Well, I'm not interested in being right. I'm interested in observing the reality and making decisions, because there are people that are going to buy just because we're at a bottom. And then I'm like, well, have you thought about it? Like, how are companies doing? Isn't that what we should be focused on? The fundamentals. Like, if you're going to buy a stock, you should know the fundamentals. The supply and demand for their product, their R&D for future products, the quality of the management, their ability to make stuff, their ability to sell stuff, their ability to make and sell stuff, and be profitable at the same time while doing it and covering the costs of high labor costs, high energy costs, high shipping costs. See, if Nike has to pay twice as much for electricity to their factories, and they have to pay twice as much for rubber and leather and vinyl, which we know as rayon and all those types of things that go into shoes. Well, that's just vinyl. So if they have to pay more for all of that, they're either going to have to raise prices or they're going to have to lower or lose their margin, their profit margin. Well, if they raise prices, people will buy less. Well, maybe that's what's going on. Nike has too many shoes. There's too much inventory. And then their wholesalers or their retailers that buy at wholesale price, the retailers have too much inventory because nobody's buying. Well, maybe prices are too high. So what do? Go to a store today. Your Nikes are on sale. So that's cool. On the short run, it's deflationary. But the problem is now profit margins have gone away. And if Nike can't make money selling shoes, what are they going to do? Okay? If Apple can't make money selling iPhones, what are they going to do? Well, if you won't buy a $2,000 phone, you're not going to buy a $2,000 tablet. But I don't know. Do people still buy stuff on iTunes and stuff? Is that even around anymore? Like, honestly, I don't know anymore. Okay, Richard, I covered that. Where did I cover that, guys? I covered that in the swing trading group 2 weeks ago. To be honest with you, I'm too hungry and too tired to do it now. But I did it, more than an hour, probably an hour and a half overview of exactly that. Okay, if we look at oil a different way, okay, what this chart says is this. Oh, right on. That'd be cool, Richard. But the thing is with the UK, as well as the Bank of Japan, but very specifically in the UK, I think they're desperate enough now that they're being experimental and they're just trying shit. And it shows you how dangerous it is for the government and the central bank to not talk. Now, it's dangerous for the government and the central bank to collude, meaning the government says, monetize our debt or drop interest rates to push the stock market up. But it's also just as dangerous or irresponsible for the central bank to be doing one thing and then the government says, let's do the exact opposite. And that's kind of what happened. And now they're like, well, based on that, then the central bank goes around and like, well, then let us try something radical. And you know, now you get two different groups making mistakes that rarely fixes a problem. So I think the lesson here is central banks and governments should talk to each other. And we're so focused on keeping them separated that they step on each other's feet, and that's a bad dance. Frank says, if gas prices go up, will that affect oil prices? No. Doesn't mean they won't also go up, but nat gas and oil are, right, completely different animals. One's a donkey, one's an elephant. All right, they both have 4 legs. Okay, but they are quite different. You can find donkeys and versions of donkeys all around the world, but African elephants tend to be in Africa. Indian elephants tend to be in India. And that's that. Very localized markets. Anywho. So that's what that says, by the way. Down. Okay. All right, so that's risk off. That would be down for Bitcoin, kicking off the daily 21. Down for oil, kicking off the daily 21. Okay. Brent selling off the October central pivot. That's even more bearish. That tells me 75 on Brent. And that says, oh my God, the S&P 500 might be coming down hard. I'm triple leveraged short, and I might just add to it. I don't have to do it today. But, oh my God, things, again, it's not a guarantee or a certainty, but there's a problem if Nike can't sell shoes. Do you understand that? They're ubiquitous. Nike is in every planet in the world. In all the war movies, when you see people the bad guys setting up IEDs to blow up the the Humvees, and right? For some reason, they drive Toyota trucks and wear Nike tracksuits. So Nike is everywhere. I don't care how poor your country is, you got Nike. So if Nike can't sell stuff, oh my God. Oh my God. Oh my God. So that would be terrible for exotics. So we got to keep an eye out on that. If the dollar gets strong again, there's another wave of that happening. What's up, RC? We'll see. We will see about that. Looking at dollar, if it's down, then it's down. Of course, if it's up, it's stuck. Thank you, Cardi B. So, bears, hello. Huh, bears? Huh? Bears, bears, bears. We don't know, but you need to be doing stuff if you're a bear. Okay? You could even do one of this kind of thing. But if you're bears, it's time to wake up or smell the concrete. Bulls, okay, bulls, if you're on the other side of that, just trap it, bulls. Don't worry about it. So you can already see I have a trap here, but then I would trap it here, right? So you got that. So if you're a bull, you're going to do like this kind of stuff. But bears, top, 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 bearish engulfing candle. Euro, daily 21. That's it. What more do you need? That's why we use it. How about that central pivot, huh? So if that is the case, we're looking at 92. Oh God, as Kanye would say. And, well, we got to work things out. 111. Got to work that one out. Okay, this one gets super interesting because we are at like intervention price. So your gap risk this weekend is the highest I've probably seen it in years and years and years. I got my stoicism going, huh? Still got my skulls. Skulls. You can't see. Skulls. Stoicism, huh? Let's see. There we go. Look at that. Skulls. Skulls. There we go. See that? It's cool. Reminds me of mortality. Yeah. Reminds me of mortality where, right? That you have today. You have today. Tomorrow's an abstract. Gap risk would be down because of central bank intervention. So this chart says up. But the central bank, the central bank oh God. Okay. The central bank. Is it possible, ladies and germs, that we get that? Is it possible? I would say so. What blood sport? That's so cool, Hope. You are so getting your blood sport on. Yeah, that's pretty funny. Yeah. 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 Okay. So holy smokes. Holy smokes. So what would be the biggest move? Well, let's take a look at day trades and say Aussie and Kiwi are getting crushed the most. So if you're going to front run a central bank intervention, which is dangerous, it's an event-driven strategy and super dangerous. But you could do something like, if they intervene, that means the yen gets super ripper strong and Aussie already sucks. Now, not in one day, of course, but let's say the very least. Oh, God. Okay. Yes, Frank, we have covered that yesterday in the swing trading group, that the Dixie is at year R2. Yep. We covered that. I think it was Johan that presented that. So we had 3 group presentations last night in the swing trading group. We looked at the coal trucks lined up in South Africa to the point where there's not enough ships in South Africa to bring the coal out. So they got to take the coal to another country where there's another port so that they can put it on ships there. That there are kilometers and kilometers and kilometers and kilometers and kilometers of giant dump trucks full of coal waiting to unload. Yep. You know what I mean? Kilometers and kilometers. So we already discussed that South African coal sales to Europe are up 720%. Oh, yeah. Yeah, we know this. I recommend that everybody here joins the swing trading group. And sometime very soon, we're going to announce an amazing new benefit for swing traders. Oh, yeah. You're going to love it. You're going to be happy. You're like, oh, Wayne, I didn't expect this at all. Well, this is awesome. And I'll say, I know, right? So in advance, you're welcome. So anyways, that could be interesting. Is there anything else I can cover today? We did gold, we did oil, we did Bitcoin, we did dollar pairs, we did yen pairs, and we talked about fundamentals. That's pretty good. Yeah, that was something I talked about last night too. We had talked about the importance of yield curve. Yeah. So, anyways, I'll be honest with you. I'm too tired and I'm too hungry. I've been up for hours and hours and hours. I've had too much coffee. I've had too much energy drinks. I've only eaten one meal. It's 10 o'clock in the morning, and it's like, it feels like 3 in the afternoon. All right, a short on Kiwi yen. Okay, what I'd be eyeballing if I was me is sort of this area here. I think it could be a very interesting day, and I don't necessarily mean that in a good way, because it's simply the end of the quarter. So what you think is good might be bad. What you might think is bad might be good. You might get good and bad. People have to move, right? And then pretty soon rebalancing, and we got NFP. And then we got to get ready for CPI in October. And right around CPI, earnings season will start. And so it could be an interesting month of October. And the sheep and the pigs are going to get slaughtered. Okay? The market will cull the herd. So make sure you're not a pig or a sheep. Okay? So peace on earth, may the pips be with you, may our profits be above average. Please have a wonderful weekend. And from the bottom of my heart, thank you for being part of this community. It's important. The effort that you're putting into this is worth it. And thank you for being part of this community. I appreciate you. Cheers.